Good afternoon. Welcome to GrainTV. My name is Cody Bills. This is Logan Burgess. Today is February 8th. We had a WSDA report released today, and let's take a look at the Fire Tip trading platform, see where we closed off the day. Corn down 3/4 cents. Soybeans finished off the day down 32 3/4 cents. That is very interesting, especially when you take a look at the actual numbers that were released. Wheat was unchanged, and Kansas City wheat closed down 1.5 cents. Let's get right into the report, though. Guys, I know a lot of people do know how to get the WSDA report, but this is the website. If you don't know how to get the PDF that the USDA releases, this is the website that you can go to, and you can kind of dig into it. They have some nice summaries at the top for each grain, and kind of breaks down what additions or subtractions they made to the previous WSDA report. Logan, wheat had a bit of a surprise. Maybe you could break down the numbers.
Yeah, Cody, you know, analyst expectations coming into this report were for ending stocks of wheat to be increased slightly here. We actually saw a net reduction in ending stocks. What was kind of driving that number there was the feed and residual number, which was raised by 25 million bushels on net, giving us a 25 million bushel decrease to ending stocks. So certainly something there that came as a surprise. We saw wheat trade higher early on in the session here, but actually closed with quite a bit of selling here toward the end of the session. Weren't really able to hold on to those gains. So I think people looked at it, took an initial first take, took it as a bullish report, but really wasn't able to hold in there toward the close.
Yeah, and you know, one of the other things that we saw today is just the trade action. It seemed very kind of really choppy for corn. It was really choppy for wheat, and for soybeans it was kind of perplexing considering the numbers. Let's take a look at the corn chart here. One of the things you'll notice here is that food, seed, and industrial improved by 20 million bushels. We did see exports reduced by 50 million bushels. The bottom line here is we have ending stocks adding 30 million bushels. That is going to be a bit bearish. One of the surprises about this corn supply and demand chart here is that we didn't see any revisions to ethanol, and ethanol has been producing a very small amount relative to what we've seen in the past. Just last week we had the smallest ethanol production on record since the EIA started producing that report. The bottom line here is that's interesting. We're going to have to see how ethanol reacts. I know that margins have improved, but I simply don't think we're going to be able to meet these USDA expectations. I think the ethanol number is a little unrealistic.
Yeah, certainly. That was one area where people were looking for a possible revision. Didn't see that out of today's action, though. If we hop over here and take a look at beans, the only number that the USDA changed on their balance sheet for beans was the expected crushing number. We saw that increase by 10 million bushels here. The average analyst guess coming into this report was for ending stocks to be lowered by 6 million bushels. They came in 10 million bushels lower, down to 125 million bushels. So not a huge deviation there from kind of what the trade was expecting. Certainly for soybeans, though, as you said, Cody, let's kind of get into the action that we saw. A relatively bullish report for soybeans. We actually had smaller ending stocks than the average analyst guess was, yet we saw soybeans trade down 32 cents. Can you kind of break down the action that we saw today, maybe give some insights as to why we saw that?
Yeah, let's turn right over to Fire Tip here. And one of the things that you'll notice is that soybeans really did have a very interesting trade day. Like you were saying, that we had almost a bullish report, and the trade reacted so bearish to it. You'll notice here, this is the 60-minute trading chart here. Each bar represents 60 minutes worth of price activity. And you'll notice for the last 3 days, we've been trading up around that $14 level with the highs of around $14.95, lows of around $14.80. You'll notice we kind of chopped around in there, kind of consolidated, and it looked like we were going to be pressuring that upside of the range. Right before the report was released, we started seeing some selling. As soon as that report was released, we broke down through the floor of this box that we were trading in and consolidated, and then took another leg lower. It was very interesting price action. Quite frankly, the way I look at this is I think that this is the last WSDA report before we really start seeing harvested acreage, harvested production come out of Brazil. I think that has some funds a little bit nervous. We're going to definitely have some competition here for exports. They didn't revise exports higher. I think that tells that the USDA is expecting for the U.S. to start losing these sales to South America. I think we're going to be pressured here in the second half of the marketing year, and it's going to be very interesting to be watching our export sales. They just may not have enough to push us higher like our model is suggesting.
Yeah,
right now.
Certainly. Right now our model does show we have a pretty sizable lead over USDA expectations in terms of those export sales. But, as you said, they didn't make any revisions today for export sales. I think one thing that the soybean bulls are going to point out too is that right now the Buenos Aires Grain Exchange is looking for a domestic production number for soybeans about 3 million metric tons lower than what the USDA is currently using. So I think there's some thought there that maybe the USDA is overestimating that crop. Could be the case with Brazil as well. Only time will tell, but I think you're absolutely right, Cody. It's gonna remain very hard for U.S. beans to remain competitive here when they start taking those beans out of the field in South America.
Yeah, and I think really, this is the daily chart here. I think there's a good chance we'll see some follow-through selling for soybeans. Yep. This just had a very interesting tone about it. The trade reaction was just very contrary to the actual numbers that were released, and I wouldn't be surprised if we see some liquidation in the days to come. Yeah. One thing that's interesting, let's take a look at the corn chart here. Now you'll notice that corn really, it didn't change much. I think early on in the trade, if you were to actually look at the 5-minute chart, and guys that don't have access to that, take a demo of the Fire Tip trading platform. You can get one at grainhedge.com, and you can actually chart out 5-minute charts, 60-minute charts, or even daily charts. We're looking at a daily right now. But early on in the trade day, we actually saw a rally. It was almost like short covering going into that report. People wanted to get out of there, exit their positions if they were short. And then we had the report come out. And we had kind of a mixed reaction, kind of choppy, and we ended up closing unchanged. I wouldn't be surprised here if corn doesn't have the same sort of follow-through that soybeans does, mostly because I just don't think we can afford to move those prices lower to spur on the demand. We know that feed and residual, the feed demand out there is relatively strong. We haven't seen any culling of the herd, and I'm concerned that if you move these prices lower, you're going to spark demand that we just simply can't support. I'm more in the camp that we're going to find some support right around that $7, that whole $7 mark, and there's a good chance we could continue moving on to the upside.
Yeah, Cody, I guess I'm going to take a little bit of a different tact here. I'm definitely a little bit more bearish than you are looking at this corn market right now. I guess when I'm looking at these numbers, I see the numbers that we saw this morning, 30 million bushels higher for ending stocks, kind of as confirmation that the demand right now is not in this market, particularly from export sales and from ethanol, which they haven't revised since the August WASDE. So that's one number I'm still looking that the USDA may be overstating in terms of corn. And if I look at a daily chart here, it has that feel of a chart that's making lower lows and lower highs, just kind of grinding lower into planning, similar to what we saw last year when ending stocks were tight as well.
Yeah, and I would agree with that. I think there's a lot of depth in what you just said in terms of analysis. Yeah. One thing to point out though is we have seen margins improve for ethanol, so that is kind of the wild card. Maybe those margins are going to increase the production and get us back on target. That's going to be a hard shoes to fill. The USDA is definitely estimating ethanol on the higher side of the range that I think is possible, but we're just going to have to see. That pretty much wraps up today's report. If you have any questions about what we talked about, give us a call at 877-472-4607. You can take a demo of the Fire Tip trading platform at grainhedge.com. Other than that, thanks a lot for tuning in. We'll see you on Monday.